Hello, today is Friday, the 5th of September 2008, and we just ended up a down week for the markets, but the S&P 500 did turn around a little bit here today. Spiders gained 58 cents, or just about a half a percent. You can see that green candle that we opened down at this level. Let me just change my trend tool. We opened down here, sold off, and then finished much higher than the low during the day. One of the biggest problems I think that a lot of people have in the market is defining what time frame that they want to trade on or be involved in the markets. And since the beginning of the year, pretty much I've been saying this is really a great day traders environment, and that investors have it tough. Realistically, we remain in a bear market. We still see this pattern of lower highs and lower lows. Maybe we're making a higher low here. Time will tell whether or not that is. But the bottom line is there remains a lot of opportunity in this market if you're fast and if you're disciplined. On my blog today, I had shown a couple pictures of, first of all, the S&P 500 at this point struggling to get back above that daily VWAP, and then right here I said, was this a successful test? And in fact it was, and we saw that the buyers took control at that point and maintained control of at least today's session. The fact remains, though, that this market is deeply damaged in here, and that there remains a lot of risk. And the risk obviously is to the bulls. I just had to pause there for a moment. But this week we saw that the range that we had been locked in between 126.5 to 130.5 had been broken. And as I was saying, I think on Wednesday, that the direction of the break will usually determine the next trend. And basically, we could look for the height of this pattern to approximate the level of the next move. That was hit today. The height of this move, this range was 126.5 to 130.5. So, as I said yesterday, I thought that it implied we would be looking for a move down towards 122.5. I said I didn't think it would happen quickly, but obviously it happened here today, and we exceeded that, traded down as low as 122. The thing is, we remain below a declining 5-day moving average. We have this prior support that should now act as resistance, and until the market can get back above at least that level, you have to be very suspicious of these rallies. It doesn't mean you can't make a tremendous amount of money in this market, because the opportunities are just huge. The volatility and the range of these stocks, if you can hit it right, and that VWAP tool is a great tool for letting you know when basically the emotional selling kind of ran its course in here today. And even if you just look at lower highs and lower lows being interrupted, that pattern was interrupted right here. Buyers took back control above the daily VWAP. It's an excellent tool for short-term trading. And again on the larger time frames, anything more than 1 minute, basically, we're still looking at a negative market, and we'd seen that the volume was diminishing on this rally. A little bit of heavier volume here late in the day, but the S&P 500 remains badly wounded here. In hindsight, we might look at this and say that was a higher low on the daily time frame, but right now you have to treat this market as guilty till proven innocent and be ready to move to the sidelines very quickly if the market turns back lower. Notice how the volume has really been increasing, typical of what happens near the end of a move. Here we had a large sell-off, then the volume came in, and we also saw that, as happens a lot of times, there's a fundamental event that gets a lot of sideline people who were looking at the same thing 2-3 days ago saying, why is the market down? Well, then we get bad news. Bad news brings on a lot of emotion. That emotion makes people do stupid things with their money and just kind of basically go in and throw stocks away. And if you can be objective and have the tools to look at the market, there's a tremendous opportunity to take advantage of that during those moments. The Russell 2000 was down slightly today. It was down 1/4% or 18 cents. But here, looking at the daily time frame, you can see that We're still obviously below the key level, which is identified on this weekly time frame at that 75 to 76 level, and we do see a lower high and also a lower low, but we did hold on a closing basis right around that 200-day moving average and above the 50-day moving average. This market remains probably more neutral than any of these markets, but you can see it is damaged, and now it's going to need to get back. Let me switch to the 30-minute time frame to get back above at least that 5-day moving average and see that 5-day moving average hold. Came close to that 72 level, which has been important. And again, this market's probably more neutral than the rest of them, but still exhibiting this pattern of lower highs and lower lows. So you have to be very careful with it. The semiconductors are the group that led this market lower. This group broke early in the week. It broke the fastest and hardest, and today it was the first one also to recapture that daily VWAP. When the S&P 500 was still struggling with it, the semiconductors were above here. So I was looking at that as a bullish sign because what led us into this decline, I figured would help lead us out of it as well. And we did see some relative strength here on today. From today's action, this market was up 1.4%, but obviously deeply wounded this week. When we look at the weekly time frame, we're still closing at on a weekly basis at lows for the last several years in here. So it remains in a bear market. Today we've got a little bit of a bounce, but and perhaps it can travel further. But with a declining 5-day moving average, you've got to be quick again to move to the sidelines in here. There's some great opportunities for shorter term traders. Ideally, what I'd like to see these markets do next week is maybe kind of move a little bit higher, then pull back, come close to these lows, either retest them with a lower low or just above it, and then maybe that 5-day moving average can flatten out and perhaps it can turn higher. And it's not just the semiconductors, but same type of situation with the S&P 500 and the others as well. The financials were up 3% today, and this market held above that 50-day moving average on a closing basis for the week. And again, I'm going to tell you that more neutral than anything. If they don't scare you out, they'll typically wear you out in here. There are still good opportunities for short-term traders in here, and you can see where this market struggled early on with the daily VWAP, but once it made this higher high here, that's when it really started to take off for the financials. But really, I don't think this is a great place to be. It's doubtful that all the bad news is out in this group and all the bad reactions are still out to that news. But it did hold up nicely today and showed an increase in volume. So that's one mildly bullish to neutral, more neutral to slightly bullish indicator for this market overall. Some of the more damaged groups really have been unable to bounce, including gold, which remains underneath this prior level of support, which acted as resistance earlier on this week at about $84 a share. Actually, that was late last week. So 840 basically. Oil continued lower in here today, and it's just a badly damaged market. It closed below that 200-day moving average 4 days in a row. We've still got the declining 50-day moving average, and natural gas, a little bit of a bounce, but still locked in a horrible downtrend. So I'd say just stay away from those markets. The Nasdaq 100 was up, it was down 21 cents here today. Obviously, the big event this week for the S&P 500 or for the Nasdaq 100 was breaking below this prior level of resistance, which it held a couple times as support near 46.10. I was expecting a sell-off, but not to this magnitude when it broke. And again, you can see that huge increase. Well, relative increase in volume as it declined. This market got pretty deeply oversold, and on the 10-minute time frame, you can see really not much of a bounce in here at all. Again, ideally, I'd like to see a test or a little bit slightly lower low, and then perhaps we can get a little bit of a trade for a few more days, maybe even up towards that 45 level. But still, this market is deeply damaged. If you're going to be trading, manage risk. Maybe you use call options instead to strictly identify what your risk is. But there remains a lot of volatility out there. I think check the blog this weekend. It's possible maybe Sunday I'll do a review of some stocks to look at for next week.